Hi everyone. Tonight's video, I just wanted to talk a little bit about a conversation I had in the Facebook group today with FX Entropy, and I'm not sort of singling out FX's comments to make out that they were wrong in any way. It just for me, it's an important. It highlighted something that I needed to talk about a sort of a mindset about the market, because I think a lot of people have trouble with trading because of the mindset they bring to trading. And anyway, the FX was talking about some test results. He'd done some test results. One with using a smaller target, which obviously is more likely to get a higher win rate, and one with the stacking and letting the trades run for a much bigger target. And he said, based on his testing, the best way to trade it was with the smaller target, which will obviously give you the higher win rate. Okay, which is fine. I'm sure on the period he tested, that was the case. But I just then want to sort of take that and sort of use it as context to a bigger, more sort of a kind of how can I say, an idea about how to make money in the market. And so, the problem comes when we decide in our minds that something is best, and that it somehow is a constant or a law. And the problem is that when we test a period, whether it's back test or live testing, all we know is how our trading worked on that particular period. And you might have one period where your particular system is super successful, and the reason for that is just that the market was particularly favourable to your method in that time. That is the only reason. It's never because of skill. It's very unlikely to be because of skill. It's highly unlikely to be that you found a particular anomaly in market movements that's going to be constant. And if you ever sort of listen to people that have built successful trading models, they don't sort of go out there and look for an anomaly in the way price moves, and then that's it. They just trade that forever and make profit. They have to kind of they have like massive amount of data, and they're like constantly updating the data every day, masses of data, and crunching it and seeing how it's performing in the current market, and then changing it. So their models, constantly evolving to suit the market that it's in, and that's because there is no to find one specific anomaly that's always going to be good is near impossible. Okay, it's just not likely it's going to happen. Okay, so getting back to my point here, the point is I kind of, the way I always think of it is that all of the particular methods can work if the market conditions are favourable for those methods. And so what we have to accept is that whatever we choose, if we choose to use a small target to ensure a big win rate, or a wide stop loss to ensure a big win rate, or we decide to hold our trades for longer for much bigger wins, there's always going to be times when it's just not working in that market. And if we know that and we accept that, then when we have periods of drawdown or times when we're losing, we're less likely to change to a different strategy. and be consistent in the long run. And what is the real problem with change into a strategy? Well, the problem is it's you're constantly doubting yourself. If you're always changing your strategy, you're basically questioning your own ability to decide on the way to approach the market. So you're kind of giving the mind more uncertainty than it already has. Okay, you're just making it even harder to profit when times are good. Whereas if you're like completely bought into the fact that, okay, this is my method, it seems to work fairly well based on back data and how I trade it live, but at the same time I'm going to accept that it's just going to work out horribly, and there's going to be times when I get drawdown more than I was expecting, or I'm going to get runs of losers for longer than I was expecting. But as long as I've accepted that those variances can happen, then I'm much better suited to deal with them and make better decisions when times are hard. Okay, so and I just kind of we're just looking at the H4 chart on GU now, and I mean, if I know this is a really small bit of data, but I could look at this last 3 weeks on H4 and decide what is the best way to trade those last 3 weeks. Okay, and then I could trade that for say 2 months and it might be successful, and I could trade it for all the whole of the year and it could still be successful. But then if I jump to the weekly chart, okay, if we have a look on this weekly chart, this is last year on the weekly chart of EU, and compare it to this year. Okay, so if I run a few variances of backtesting data on here, and I found what was best, you can see we've been in a pretty tight range in EU all year, and if you compared it to variations on last year where EU trended all year, we'd have very different results. Okay, so the point I'm trying, the real point I'm trying to drive to here is that we should really try and get away from thinking what's the best strategy and think more of a sort of all-round method that incorporates how we want to trade, the time we want to trade, what sort of drawdown we're prepared to live with, how many consecutive losers we're prepared to live with, and then kind of tailor the strategy as much to that as we do to which perform the best pips wise on a back test. So I just kind of want to bring that into it, and I just kind of want to reinforce this whole uncertainty thing. We really got no idea about how our strategy is going to perform in the future, but at the same time you've got to have kind of like a core belief that the chances are it will do okay, because I kind of believe it's based on how the market moves most of the time, and sure, there's going to be weird variances and anomalies to that so that don't always go in my favour, but I'm prepared to accept that and go ahead and trade, and I feel that I'm going to make profit in the long run. Just as a silly example here, last week when we had secured this high short on GU, and then this bar just taps you out by a few pips. Do we make any changes based on movements like that, or do we just accept that there's going to be random occasions where your trade is spiked out by a big news event. Okay, at the same time, we secured this low here for a very small amount of pips risk, and it ran all week. So, do we then make a variance on our exit strategy because, and just secure these? And I think when we get sort of too much into trying to fix down exactly what risk to reward we want on each trade, how many pips we're going to risk, how many pips we're going to exit at, we kind of handicap ourselves in a way. Maybe that's a good way to start, but I think going forward we should kind of adopt more of a growth mindset and accept that we're going to sort of just learn as a sort of natural skill and get better at it as we go along, and perhaps reduce those boundaries a little bit more. I mean, for instance, right now I've decided I just want to trade the highs and lows of the week, okay, and not take any reverse trades, okay, and that's because I've been moving around a bit, visiting family, and I want to take as few possible trades as possible. Now, am I going to make a judgment as to whether trading the high, just the high and low, is going to be better than trading the reverse trades as well? No, I don't know. It's dependent on what the market does, but I've got a belief that both approaches will be consistently profitable. And I find that in my trading when I switch from H1 to H4, although my sort of win rate moves around a little bit and the size of my wins, I find I kind of even out over time at about a net 100 pips a week. So I find that all of these little elements that we find that are really key, they're not. I mean, it's much more how you approach the charts as a trader as well, and what's going on in your head when you're trading, because I think those consistent results are eroded more often by the trader making errors in decisions, much more so than how we decided to manage our stops or take our entries. So I know it's a bit of a weird sort of ramble this week. These kind of things are really hard for me to get over, and but I like to do these videos because for me it's like a really important part, and it's kind of hard to put it down in simple to follow rules, but hopefully you kind of get a little bit about what I'm trying to explain. So anyway, I'll see you in the room. I'm not really going to update the trades at the moment, not much movement. I think I've added a long and a short, and I've still got a short from last week's high. So obviously breakdown would be nice, but we'll see what happens. That's it for now. I'll see you in the Facebook room, and good trading, everyone.